Welcome to Trading for Beginners. Everything you need to know to start trading. This video will cover key concepts like markets, charts, risk, and psychology to prepare you for your first trade. Here is the table of contents for the video. We will start with the basics of trading, then move into setting up your trading station and reading charts. Finally, we'll cover risk management, psychology, and your first trades. Trading is the act of buying and selling financial assets to profit from price movements. The basic idea is to buy low and sell high, or sell high and buy low, which is called going short. Trading is different from investing, as it focuses on short-term price action using technical analysis. There are different styles of trading. Scalping is the fastest, holding for seconds or minutes. Day trading involves closing positions before market close. Swing trading can last days to weeks. Position trading is the longest. It is recommended to start with day or swing trading. You can trade various markets, including stocks, futures, options, forex, and crypto. Each has unique rules and characteristics. This video focuses on NQ futures and SPX and DX0DTE options, which offer direction and defined risk respectively. Markets work based on supply and demand. Price moves up when buyers outnumber sellers and down when sellers dominate. The order book is where exchanges match buyers and sellers electronically. The difference between the bid and ask is the spread. Starting trading requires specific equipment and capital. Ensure you have a reliable setup and charting software like TradingView. For capital, minimums vary by market, but you should always start with money you can afford to lose. Paper trading is free and is the best place to start. Your trading station needs to be optimized for focus. This includes a clean desk, multiple monitors, and a comfortable chair. The software setup should include your broker platform and a trading journal. Keep distractions like social media off your trading screens. Choosing a broker is important. Look for a regulated broker with low commissions, reliable execution, and good charting tools. Test their platform with free paper trading first. Start with just one broker and ensure responsive customer support. Account types vary. Paper accounts offer virtual trading, cash accounts are safest for stocks, and margin accounts allow leverage. Futures accounts are separate and margin-based. A great starting path is paper trading, then moving to micro futures or a prop firm evaluation. The pattern day trader or PDT rule restricts those with under $25,000 in a margin account to 3-day trades in 5 days. Futures are exempt, making them ideal for undercapitalized traders. You can also use a cash account or a prop firm to avoid the PDT rule. Now let's move on to reading charts, focusing on price action, candlesticks, indicators, and technical analysis. Candlesticks are the basic building blocks of a chart. Each candle represents the price movement for one time frame and indicates the open, close, high, and low. The color and size of the body and wicks show whether buyers or sellers dominated the period. Time frames range from 1 minute to monthly charts. Higher time frames offer the bigger picture, while lower ones provide more detail. Day traders commonly use the 5-minute time frame. A good beginner stack is to use daily and 1 hour for bias, and 5-minute or 15-minute for entries. Support and resistance levels are the most important concepts in technical analysis. Support is where buyers step in, acting as a floor. Resistance is where sellers step in, acting as a ceiling. When these levels break, they often flip roles, which is a powerful trading signal. Trend identification is crucial, as trading with the trend has the highest probability. An uptrend or bullish trend is characterized by higher highs and higher lows. A downtrend or bearish trend shows lower lows and lower highs. When ranging sideways, be patient or trade the range. Key indicators confirm what price is already showing. Trend indicators include the exponential moving average, or EMA, and the volume weighted average price, or VWAP, used for intraday fair value. Momentum indicators include the relative strength index, or RSI, and volume. Start with EMA, VWAP, RSI, and volume. Chart patterns, such as head and shoulders and triangles, are macro structures that tell you where a move is likely to occur over hours, days, or weeks. Candlestick patterns, like engulfing and hammer, are micro patterns that indicate when a reversal or continuation may happen over 1 to 3 candles. Study both. Now we move on to the most important skill in trading, risk management. This skill separates the long-term winners from the losers and is essential for surviving the inevitable losses in the market. Risk management non-negotiables start with the math of ruin. Losing 25% requires 33% recovery, and 50% loss needs 100% recovery. The most important rule is the 1 to 2% rule. Never risk more than 1 to 2% of your total account per trade. This rule ensures survival during losing streaks. Position sizing turns your 1 to 2% rule into concrete contract or share numbers. The futures formula calculates contracts based on max risk, stop distance, and tick value. For stocks or options, the formula is similar. Always round down your position size to prevent risking more than your determined maximum. Every trade must have a stop loss and a take profit defined before entry. The stop loss is a hard order placed beyond a logical support or resistance level. The take profit is based on the next key level. Never move your stop loss further away. Take partial profit at 1R and trail the remainder. Risk-reward, or RR, is the ratio of potential reward to potential risk. A 1 to 2 RR means risking $100 to make $200. With a 1 to 2 RR, you only need to win 33% of your trades to be profitable. Focus on high RR setups over high win rate setups for long-term consistency. Trading psychology is the mental game. Avoid killer emotions like fear, greed, FOMO, revenge trading, overconfidence, and boredom. Instead, focus on a disciplined mindset. Trade the plan, not your P&L. Focus on the process, not the outcome. And remember that discipline is a skill you must practice. Your trading journal is your most important tool. Record details like the trade time, instrument, entry, exit, position size, and RR achieved. Track your emotional state. Reviewing this data weekly helps identify your best setups, eliminate bad habits, and measure overall expectancy. Set hard daily loss limits, such as 2 to 3 losses, or 2% of your account. When you hit it, close the platform immediately. Other essential rules include maximum trades per day, sticking to your best session, only taking defined setups, and avoiding trading when distracted. Now we discuss your first trades, including paper trading, building your plan, and the step-by-step process of execution. Paper trading is mandatory before risking real money. It helps you learn the platform, practice your strategy, and build disciplined habits without risk. Treat it exactly like real money, using the 1 to 2% rule. You must be profitable for 2 consecutive weeks on paper before going live. Your trading plan removes emotion. It should define your instrument, style, trading hours, specific setups, strict risk parameters, and precise entry and exit rules. Every trade must adhere to this plan, and you should review it daily before the market opens. The first trade process involves pre-market analysis, waiting for your session, and identifying a valid setup that meets all criteria. Next, calculate and place the trade with a hard stop and profit target. Manage the trade without emotion, and rigorously journal the results. Understanding order types is crucial for execution. Market orders fill instantly, but may slip. Limit orders fill at your price or better, and should always be used for entries. Stop orders trigger market orders for stop losses. Bracket orders combine entry, stop, and target in one, which is highly recommended for disciplined trading. Consistency is built on routine, pre-market, review price action, economic news, and mark key levels. Post-market, rigorously journal all trades. Calculate your risk units, and step away from the screen for physical activity and rest. Sleep is your trading edge. Taxes on trading profits differ by asset. Stock and option gains under 1 year are taxed as ordinary income. Futures contracts offer a significant tax advantage, with 60% taxed at the lower long-term rate, even for day trades. Always consult a tax professional for specific advice. Essential trading tools include charting platforms like TradingView, an economic calendar, and a diligent trading journal. For learning, utilize free resources such as the HPT Academy, the HPT Discord, and reputable books like Trading in the Zone. Avoid costly, unproven courses or signal groups. Avoid common beginner mistakes that destroy accounts. Never skip paper trading. Always use a hard stop loss to prevent catastrophic losses. Avoid oversizing positions and revenge trading after losses. Keep your charts clean, and remember that not every day offers a valid trading opportunity. Your learning path is a staged progression. Start with education, then move to paper trading. Next, trade with micro/small size live, focusing on consistency. Finally, scale up gradually based on proven results. Remember, consistent profitability takes 1 to 2 years. The reality of trading is that it takes time, typically 1 to 2 years for consistent profitability. Accelerate this by focusing on daily study, dedicating yourself to one market and one strategy, rigorous journaling, and extensive replay mode practice. Be patient, as growth is not linear. Before you trade live, use this checklist. Ensure your trading plan is written, you've been profitable on paper for at least 2 weeks, your risk rules are memorized, and you are starting with minimum size. Do not skip any of these steps. Remember these key takeaways. Futures are often the best market for new traders. Risk management and a high RR ratio are essential for survival. Psychology often determines success. Write your plan, journal consistently, and embrace the 1 to 2 year learning process. Thank you for watching this video.